To another Lunch and Learn hosted by Questrade Company. Today we have a very exciting guest with us, Mr. Fred Moskowitz, and he is going to be talking to us about due diligence on mortgage notes. I am Nicole Bako. I am an IRA specialist here at Questrade Company. There's my contact information. I'll put that back up later. I do have a few slides to show you before we get Fred up here. Just a little bit about Quest in case you're new. And then, of course, even if you are a Quest client, of course, we want to make sure you have the latest and greatest news. So here we go. Slideshow from beginning. There we go. All right. Victor, I'm assuming it's right unless you tell me it's not. Okay, it's ready then. All right, again, thank you for joining us. We love having you here. We really appreciate you taking time out of your day to learn more about self-directed IRAs. All right, so there we go. Who is Questrade Company? We are a lot of things, but I did want to point out the two brothers that actually started Questrade Company, Quincy and Nathan Long, were actually self-directed IRA customers or investors themselves. And, they kind of took stock of what was going on, what worked for them, what didn't work for them. So they built a company out of what they would want as a consumer, as a client. So I really think that's amazing that's kind of where the company came from is, actual investors. Built by investors for investors. So we are the largest self-directed IRA custodian in Texas, 20,000 active. I think that number is bigger now, but at least 20,000. I think it's 23,000 active investors all over the country. So no matter where you're joining us from today, we, of course, can help you. We are growing. We are about 100 employees with 34 certified IRA services professionals. This means that we have studied everything up and down about IRAs, and we'd love to help you out. 400 million in undirected cash. That is opportunity. That's cash in the accounts that has not been directed. So opportunities there for investments, lending, borrowing, what have you. Of course, our disclaimer, this webinar, like all of our webinars, is for education only. Questrade Company does not give any legal, tax, accounting, structuring, investment, or any advice at all. Before getting into any investments, make sure you are doing your due diligence on the investment, on the people that you're doing it with, and you are absolutely meeting with your accountant, attorney, people that, do your taxes, all of your professionals that you need to work with. All right, there. All right, so what is a self-directed IRA and why should you have one? So actually self-directed is really just a marketing term. It's not a different type of IRA. It just means that you can use our open architecture platform to invest in many, 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 many things. And here at Quest, we hold private assets like real estate, promissory notes, and private entities. So it lets you have this wide open, you get to pick. So self-directed means you get to direct it. You get to tell Quest what you want in your account. And then we help you facilitate that transaction. So that's the role of Quest. We're the custodian, and then we help you facilitate that transaction. So huge, and then of course the benefits there, huge piece of diversification. Nothing wrong with the stock market, but this, that might not give you as much control. Self-directed accounts, you're controlling the whole thing. So definitely a diversification to your investment and retirement portfolio. Tax savings, we do have some accounts that are tax deferred, and we do have other accounts where you can actually get your retirement tax free. Contact your IRA specialist to learn more about that. Social investing, some people do like seller financing and, loan money to fund other real estate projects, right there in their own community. So they're, helping people that might not be able to get a traditional mortgage and kind of watching their local community improve. So, really nice there. And invest what you know best. If you're a realtor, you work with notes before, you've been in banking, what have you. This is where you get to use your education to help you retire. All right. So these are our 7 accounts. We do have the traditional and the Roth IRA. That's the one with the tax-free retirement. So call us up if you don't have a Roth IRA, or if you want to hear how the Roth IRA can get you a tax-free retirement. The IRA specialists are standing by. Of course, our employer plans, if you're self-employed, we have the SEP IRA, Simple, and the Solo 401k. And then our specialty plans, we can get some tax-free money out of here too. So call us up. We'll tell you how that works. Here's the 3 main asset classes that our clients typically invest in. But honestly, there's more that you can choose from. Oil and gas. We even have cattle and some accounts. So, really wide open. The client portal is something we're really proud of. The marketing and the operations team systems has been working really hard. You can truly run your account from the client portal, upload documents, send us documents, complete your entire investment, get your tax documents, pay any expenses related to your asset, get all of your annual reports. Really, it's all out there. So make sure you're using that. Of course, endless free education like we are now. Here are some, and we are going back to some in-person events, which we're so excited about. So if you are in the Houston area, the first Tuesday of every month at 6:30, please stop by our office for some networking and some education. We'd love to have you. So this is our, in-person back networking events. Austin office is doing the second Tuesday of the month, and the Dallas office is the third Tuesday. Yes, we have, food and drinks and whatnot. So it'll be fun, and you'll, get some learning out of it as well. And of course, additional classes and webinars. We do have a noon class on Saturdays as well. Self-directed Saturday, noon Central. Check that out. All of our classes, including this one, stream live on YouTube as well. And under the video section, that's where they all are. So you can find them all there. And we are having our next virtual networking happy hour tomorrow night. I am hosting it. We would love for you to come to register. Just go to our website and go under events. That's where you can register for that. Network with other people, see how other people invest, learn, if you're a beginner. So that is really great, especially if you're not in the Texas area. Great way to meet new people. Okay, and Quest Expo, not QuestCon Live, Quest Expo is coming back this September. So start looking out for those emails for those early bird ticket prices. We're really excited to have this in person again. Of course, we're going to have those great speakers and lots of fun. So everybody get ready for that. How to get in touch with us. We're really easy to get in touch with. Chat with us live on our website. It actually is manned by us, the IRA and transactions specialist. It's not a robot. Give us a call. We'd love to help you. And I love our phone number. We really do think this is fun. 855-FUN-IRAs. Of course, email me. I'm happy to help you. Nicole.baco@questtrust.com. All right. It is quite enough from me. Everybody, I'm sure, came to hear Fred, not me in my intro. So without further ado, welcome, Fred Moskowitz. It is a pleasure to have you back.
Hello, Nicole. Thank you. It's wonderful to be back. I'm so excited. I love collaborating with Quest on webinars, and really looking forward to getting into some good discussion today.
Great. Me too. Yeah. I know you're going to give us a great presentation, and I'll see you at the end.
Thank you. Thank you. Hello, everyone. My name is Fred Moskowitz. Like to share a little bit about myself. I have been active as a node investor for over the past decade, and been involved with real estate and other alternative investments for the past 20 years. And I love so much using self-directed accounts, and in particular with mortgage notes investing, and we'll get into that a little bit. Um, so as I said, I've been active for the past decade, active in note investing, and I'm a note fund manager. And one thing that I see a lot with note investors is that they don't learn to use self-directed accounts together with note investing, and it can provide so much tax advantages to do that. It's really a uh, powerful combination. It really is. But today we're going to have a discussion talking about due diligence for any of you that are active already in note investing, or if you're just learning about it today for the first time. We'll have some perspective for everyone. And the biggest part of note investing is the due diligence. It's super important. It's one of the most valuable skills that you can have if you're active as a note investor. So let's jump right in. I'd like to start just to give a basic overview. What is note investing? What is note investing all about? Note investing is note investing is investing in the debt instead of investing in the real estate. And what I mean by that, so many investors, they may buy rental property or buying a primary residence, and think about a note and a mortgage from the perspective of just from being the borrower, because that's the financing that allows for that transaction, right? But a lot of investors don't um, think about the note and the mortgage from the perspective of the investor, where you as the investor are actually stepping into the shoes of the bank, of the lender. You become the lender, and now you can become the one receiving the monthly payments from that property. And so that's what note investing is all about. um, it's something that not a lot of people talk about, and it can be so powerful. And if you think about this, banks figured this out centuries ago, that they would rather own the debt on a property instead of owning the property directly. And so it's a great avenue as a passive investment. I think it's ideal for owning inside a self-directed retirement account because of that. And and so that's what note investing is all about. Think about it. You, as an investor, you place your capital, you acquire a note, and in return for that, you're receiving the monthly payments each month. Or in the case of a note fund, you would invest in that fund and receive a rate of return as a passive investor in that fund. So there, there's really those are the two ways to get involved in note investing. It's through investing in individual notes or investing in note funds. And there are pros and cons for each of those approaches. And you can really decide and decide for yourself which one is going to work the best. It all comes down to what's going to fit into your lifestyle. How much time do you have? That's one of the really big considerations. If you are an active investor, you're going to be hands-on in the business of note investing, doing a lot of activity, and you have to put in the time. Absolutely. However, if you are a busy professional, or you're a business owner, maybe you don't have a lot of time, then you may want to look at passive investing, where the work you have to do is really upfront, doing your initial due diligence. Once everything's set up, there's really not a whole lot of time commitment involved. It's really just monitoring and risk management on an ongoing basis, which is much less work. And so that's the difference between investing in individual notes or investing in a note fund. If you're investing in actively, you're going to be investing in notes directly, going out to the secondary market, buying those notes, doing the due diligence on them, and managing them on an ongoing basis. Now, if you're passive, you want to invest in a note fund, then all of that work is being done by the fund managers and their team, where they're handling the acquisition of notes, finding them, negotiating them, and managing them. That's the difference. So let's dig down a little deeper with active note investing, right? What are the major areas? So first is having a plan for note sourcing and marketing, and the work you do to find notes to buy. Next is that due diligence pre-purchase, before you buy those notes. What is the due diligence that you're doing on them to evaluate them, to make sure they meet your risk criteria and your business model? Next is vendor management. With note investing, there are multiple vendors that come into play, and some of them may include note servicers. You have your attorneys and legal representation, as well as the different vendors that are providing data to you, data sources that are needed for doing research, for doing note evaluation. So there are some different data providers that you would be working with. Now, one of the cons of being an active note investor is you may end up with less diversity, especially if you're just getting started and you don't have a lot of capital. Your capital is spread into however many notes you can afford to buy. It may be only one or two notes. And so the risk there is all of your capital is in one deal or two deals, right? And so that's why there's less diversity. I think it's a really good idea to have more diversity, and you do that by buying larger amounts of notes, and all of your capital is now spread out. That's a great risk management strategy. Now, active note investing, it's better for anyone that has more time available and they want to dedicate to being active in the business and hands-on. And some people, they love that. That is their jam. And if that's you, then you may look at active note investing as the approach you take. Now let's jump over to passive note investing. Here's some of the differences, the contrast from what we were discussing earlier, right? With passive note investing, you're investing in a note fund. And with a note fund, you're relying on the fund manager, the operator of that fund, and their team. They're going to be doing all the heavy lifting on your behalf. which includes sourcing and acquisition, the due diligence on all of the notes that are being purchased, as well as the ongoing management of that note portfolio. It is a lot of work. And you have that diversity, the diverse asset pool, because when you invest in a note fund, your investment of capital is spread out over hundreds of notes, or maybe even thousands of notes in a larger fund. And that's how you get that diversity. And for anyone that has less hands-on interest or time, they have less time. As I said earlier, you may be a successful business owner, or you may have you may be a professional. You have a W-2 job you're working. It really can be great for you because there's not much of a time commitment ongoing, and that's helpful to a lot of people. That's going to be appealing and better for their lifestyle, for your lifestyle. There's no right or wrong answer here, folks. It really comes down to you. Think about what's your individual situation, and how much time do you want to spend in note investing in this business. Now, the next part of due diligence is thinking about your investment goals and objectives, right? If you're evaluating a note fund, this is so important. This is the first part of your due diligence, is understanding what are your investment goals and objectives. And let's run through these, right? The first one is your time horizon. How much time do you want to have your capital at work for you? Is it 1 or 2 years? Or maybe it's a midterm where 3 to 5 years, or maybe your time horizon is longer. It might be 10 or more years, right? Especially if you're investing with retirement account funds. I find that most people have a longer term time horizon. And so you want to make sure that whatever note investment you're looking at, it's going to match up with that. Different note funds, some run for 1 year, have a 1 or 2 year time commitment. Others may have a 3 or 5 year time commitment. There's no right or wrong answer. You'll see all the different ones. It's just important for you to evaluate that and make sure it matches up. It's in alignment and congruent with your own time horizon. Next is the risk tolerance. What is your personal risk tolerance? And this really depends on a lot of things. The level of experience you have also may be impacted by how soon you're going to need that capital back, right? If you are using retirement account funds and you plan on reaching retirement age in just a couple of years, you're going to have a very different risk tolerance than a person that might be in their mid-20s. They have a long career ahead of them, and they may be interested in taking on more risk in return for a higher growth potential. So you want to think about your risk tolerance. And really, the other part is what keeps you up at night, right? Are you going to get involved in an investment that you're worried about what may happen, and have that nagging feeling? So you certainly want to keep that in mind and think about how you feel, what's been your experience with other investments in the past, and make sure that your risk tolerance is at a place where it's in line with the investment. Now, another aspect is, how are returns paid out from the investment? Are you being promised, or being offered, I should say, is it going to be a straight rate of return, a fixed rate, or is it some kind of a variable with a profit share at the end? There are both. It can be done both ways, or maybe it's even a combination of the two. I've seen them all in the past. So it really comes down to the business model of of the note fund and how they're set up and what they're offering. So you want to ask about that and make sure you have a good understanding of how that's going to work. Another very important point, this is something to learn about in the beginning, is whether the fund requires an accredited investor status or they allow non-accredited investors. And so it's important to know about this up front to save you time. If some funds will be open and some investment offerings, they're only open to accredited investors. And what an accredited investor is, it's it's a designation that is set up in our securities laws, where an accredited investor is considered to be more sophisticated, more savvy with understanding investments. And there's two tests that are done. The first one is that your annual income is above $200,000, or if you're a joint husband and wife, then it would be $300,000 or above in annual income. And the other test can be done through assets, where net worth. If you have above $1 million in net worth, excluding your primary residence, then you would be considered an accredited investor. And that's really it in a nutshell. So you want to look at the offering, the fund, whatever it might be, whether they accept accredited or accept non-accredited, and make sure that it matches up with your situation. And if you're not accredited, don't worry. Don't be discouraged, because there are definitely investments out there that are open to non-accredited investors. I meet investors all the time that they're non-accredited, but they're on the path to become accredited, and I love that. That's the right attitude to have. So don't get discouraged if you're non-accredited. There are offerings that are available to you. It's a little more work to find them, but they are out there. So just understand that distinction as you're evaluating investments and doing your due diligence. So let's talk about some of the subcategories of notes. When you're looking at a note fund or individual notes, understand that there's different subcategories of notes. The first one is whether the notes are residential notes, which are on residential properties, just like homes that you and I live in all across the USA, right? Think of it like the traditional Fannie Freddie guidelines for residential property. It's a single family house, or can be 1 through 4 units, and considered a residential property. The other category is commercial notes, your business loans, your commercial loans for large apartment buildings, or retail spaces, or commercial spaces, office buildings, all of that. There are notes on all of these types of properties, because as I mentioned earlier, most real estate is purchased through some type of financing instrument. Next subcategories are whether it's secured or unsecured. And secured means that there's a hard asset, in this case real estate, which is backing that note. There's a guarantee for the note, where there's recourse by the lender against that security. And that's what a secured note is. A car loan is secured by the title of the vehicle, right? A mortgage note or a deed of trust note is secured by the property, where which is attached to that loan. Now, some examples of unsecured loans could be consumer loans, credit cards, or a personal loan that you get at the bank. Those are all considered unsecured loans, where there's no collateral that's put up for that instrument. Another subcategory of notes is whether it's performing or non-performing. And it all has to do with the history on the note. If the note is performing, payments are being made on an on-time basis each month, that's a performing note. Pretty straightforward. A non-performing note means that the note has some type of delinquency. The traditional guideline that's used in the industry is 90 days or less. So once the loan is delinquent more than 90 days, then it's considered non-performing and it goes into that category. And so note funds and note investors may choose to invest in performing notes or non-performing notes or both. And it's important to understand in your due diligence which one of these is applicable, because the non-performing notes, as you can imagine, has a lot more risk associated with it than performing notes. And I've seen both. I've seen note funds that focus strictly on performing notes and cash flow, and others focus more on non-performing notes. And so you want to have a clear understanding of which one is relevant in what it is you're evaluating. So here's some risk management considerations with notes. The first one is the geographic diversity of assets, right? If you are investing in notes limited to a specific geographic area, maybe you like notes that are all in California or Texas or wherever you are. Some people like the idea of investing close to home. They want to be near properties that they can drive within a reasonable time frame to drive out to the property. And so there, when you do that, you're going to have less geographic diversity there because everything's concentrated in one region or one state. And as opposed to a note investor or a note fund that's doing nationwide acquisitions where they'll buy notes all over the country. And now you do have geographic diversity that way. And that's the difference there. The next one, fund structure and SEC status. And this is so important. If you're investing passively with a note fund, you want to check and learn about what's the fund structure, how is it set up, what's the status with the SEC. Did they do all their filings and disclosures properly? There's so much compliance with note funds, and unfortunately, not everyone does all the proper steps. Some folks out there want to cut corners or do different arrangements where they'll receive capital from a passive investor, but they're not properly structured with a fund and a formal offering and formal private placement offering. And that's a huge red flag, I think. You want to be really, really mindful of that. And this is a question always to ask is, what is the fund structure? What's the status with the SEC? And you can look into that and check that independently as well. But be aware that there are investment operators that may have cut corners or may have skipped some steps, and you want to be aware of that. It's very important because that's going to give you a good feel for who you're dealing with and how they operate their business. You want to look for folks that are professionals, that are doing things the right way, which helps to protect you as the investor from problems down the road. Another consideration is vendor diversity. This is something I feel is so important. You want to have different vendors, right? Whether it's different note servicers or different attorneys, diversity, because companies may shift, they may pivot, they may go out of business, and you have to be able to accommodate any of these changes, especially if you're managing a larger portfolio of notes or you're a note fund, you have many, many notes. I feel it's very important to have vendor diversity, because you are going to have to change and adapt and pivot over time. It's inevitable. And so it's important to be well set up for that. So I would look into that risk, the risk of vendor diversity, and just make sure there's a plan for that. Now, the next area of due diligence is with respect to your investment sponsors and the fund managers, whoever it is you would be dealing with. And I would say this goes for whether you're investing in a note fund or a real estate in syndication, an apartment deal, anything. This is something you want to really spend a lot of time with and getting comfortable with who's running and who's operating this fund or this investment. The people, the principals on that, make sure they have a good record, a good track record, understand their history. The first place to start is background checks. Run background checks on the entities you're investing with, as well as the individuals that are the principals. Make sure that you're happy with their history and their track record. Do that through background checks. You can run background checks on other individuals before you choose to do business with them. It's a common practice, and it's just something you have to ask permission to do. And an investment sponsor should be completely agreeable to allowing you to run background checks. Next is, what's the experience and expertise? Take a look at that. Take a look at the track record. Take a look at their history managing the investment asset class, whether it's real estate or notes, whatever it is. How much expertise do they have? I like to see a good, solid track record of multiple years. Which really tells you you're going to be working with a professional. They know how to address problems, how to solve problems as they come up. Super important, because that's one of the things you're going to be relying on the fund managers to navigate through any stormy weather as time goes on. The next point, reputation in the industry, so important. And this is something you can verify independently. Just ask others, talk to other people, talk to your fellow investors at Quest, right? When you go to those, do you attend those networking events they have? They're really great events. I love attending those, by the way. Meet other investors, talk to them, ask who if they've ever dealt with a particular investment, and you can ask for referrals too, right? If you're evaluating a fund, you can ask for investor referrals so that they will provide those to you, and do some independent verification. That's the last point, referrals and references. Check out the references. Make sure you're comfortable talking to people and understanding the feedback that you can get. I find that people don't do this often enough. Investors may gloss over this, but ask for a couple of references, make some phone calls. It will be the best 30 minutes that you've ever spent. And you may end up meeting some new people along the way. That's just added side benefit. So definitely when you're doing your due diligence, these 4 points, I would say this is the top things, right? Your background checks, looking up the experience and expertise of the fund managers, as well as their reputation in the industry, and ask for some referrals and references, and then follow up with them, make those calls. So some final thoughts that I'd like to share with you today is when you're evaluating any investment, talk to your accountant, your CPA. Make sure that you fully understand the tax consequences of the investment. Uh, are there, because some have tax consequences. You don't want to be hit with any surprises. And so this is something you do up front before you get involved. You want to understand what are the tax consequences for you, for your specific situation. And the best person to have that conversation with is your accountant, your CPA, your tax advisors. Next is think about this as you're building a relationship. I don't recommend going as a transactional approach. Think about a long-term approach where you're building a relationship with the investment operator, the fund manager, and think about this. If things go well and you like how they're treating you, you're going to want to do more deals in the future. And so that's super important. It's a long-term relationship. And so approach it that way. Approach it that way from the beginning. My last point is education. Education is something I want you to always invest in yourself. Always be looking for opportunities to further your education, to learn. You're attending these webinars that Quest puts on. It's fantastic resources, and it's always things for you to learn from. You can learn online. You can learn through books and podcasts. You can learn through attending live events as well. So take advantage of all of those and always be looking to further your own investing education. That's one of the most important investments that you can ever make, is investing in yourself. Those are the words of one of our founding fathers, Benjamin Franklin. He always talked about that quote, and it's one of my favorite ones. I want to share some resources for you real quick. The book Invest in Debt by Jimmy Napier. This is one of the first books I've ever read on note investing. It gives a great deep dive into note investing. If you want to learn how to use a financial calculator, he spends a lot of time covering that in that book, Invest in Debt by Jimmy Napier. Next resource is learn how to use a financial calculator. You can buy a calculator, an actual financial calculator, or what I like is running a smartphone app. The best one that I found is called the 10bii smartphone app. It's the best $6 you'll ever spend. It's not free, but it's only $6. It's well worth it. You always have it on your phone at any time. You can evaluate cash flow. You can evaluate a note within a few minutes right there. I really love that. It's really easy to use. Another book which I'd love to talk about is my own book, The Little Green Book of Note Investing. You can find it on Amazon, and it gives a great high-level overview all about note investing. If you liked what I talked about today, that book will go into much more level of detail for you. And I would like to invite all of you to visit my website, which is giftfromfred.com, and you can sign up to receive a special report on note investing. Be happy to email that to you. Now, at this time, I'd like to open it up for Q&A. We'll take some questions from the audience. And again, my contact information is here. You can visit my website at fredmoskowitz.com, or for a little easier spelling, just go to giftfromfred.com. I look forward to connecting with you. And if we have a few moments, we can take some questions from the audience. Thank you.
Well, hello. That was amazing. Thank you so much, Fred.
Yeah, thank you. Thank you. was great. Great to be back with you, Nicole, and doing events with Quest is so much fun. I really encourage everyone, like, take advantage of those networking sessions, whether it's online through Zoom or in person. Take advantage of that, meet other investors, learn what other people are doing, and it just opens you up to new ideas, having those conversations, learning about new concepts.
Thanks so much. And of course, I agree. I think that, Quest is fabulous. And I think that the networking events are so important because I do hear from clients, I don't know anybody, I don't know where to start. And those networking events, you never know that one person that you meet that knows maybe they can't help you, but they might know somebody who can help you.
Exactly.
Your net worth is your network.
It is. It is. And think about this. You may have your financial capital in your self-directed retirement account and you want to invest it. That's your financial capital. But what about your relationship capital? The relationships you have. And so the way to build that is through networking, through meeting people, through attending events, and talking with other like-minded folks.
Absolutely. Yeah. One question is coming in. Evaluating individual notes. Could you give a few tips on evaluating individual notes? Would you kind of use the same steps or maybe do it a little differently?
I would use a lot of the same steps. I would say before you even look at the note is evaluating who's selling you the note. Are they reputable? Do they have a good reputation in the industry? That's the first place to start, right? And just ask other note investors. Note investment world is a small world. We all know each other, and we all do business and trade notes with each other. So there's bound to be, whoever you're dealing with, other people know who they are. And so ask for referral references on that as well. And so that's where I would start. So look at who the note seller is, look at who's servicing the note, look at the property details, of course, and get comfortable with that, the value and everything, and then the borrower information. And so your note seller should be able to provide you most, if not all, of that data and information that will allow you to conduct your due diligence.
I really like that you added that in there. Ask for references. I haven't really heard that, and I think that's very valid. And really a good thing to look into. And
any business transaction, be comfortable with who you're dealing with.
For sure.
Whether you're seller or your buyer, you want to strive to do business with upstanding individuals. Correct. That have a good reputation, and that will keep away 99% of the problems.
Mm-hmm. I like that. We have a new note investor that has a question. Investing on the fund side, what would be the difference in yield of a secured first lien versus a non-secured note?
Well, with the funds, it varies, but I will say that it's going to be lower. Here's a give a general answer. First lien notes are the safest type of notes as opposed to junior liens. And there are funds that focus on first lien position notes. There are other funds that focus on junior liens. The ones that do junior liens will generally pay a higher rate of return because there's a little more risk, a little more work to manage those. And so there's no right or wrong answer, but just understand, like any investment, if you want greater security and less risk, you're going to earn a lower rate of return than if you can take on a little more risk.
So yeah, really looking at that risk factor. I used to call it the sleep factor when I was in like the stockbroker world. If you can't sleep at night with the investment risk tolerance that you put down, it's probably too risky for you. So I like that. Always make sure, you're working with your own risk tolerance there.
Yeah, within your own comfort level. And and there's all different ways to approach it. I've seen some people where they say, I'm going to take one bucket of my capital, put it into low risk. And I'm going to take another bucket of my capital, put it into more risky things. Maybe it's a smaller amount of capital, but you're comfortable with that. And then as time goes on and you have more experience, your comfort levels will change and your interests will change. And you'll say, oh, I'm more comfortable with this asset class, so I can take a little more risk. I'm okay with that. And there's no right or wrong answer. It's a big part of it is, how do you feel? The worst thing you want to do is get into an investment and then after that you can't sleep every night because you're worried so much about that. That's probably not a good idea for you, because what good is that anguish and all that worry going to do you in your life, right? That who wants to live that way?
Not me. I like it, Fred. What golden nugget piece of advice would you give to people just kind of starting out, with note investing?
Just starting out with note investing, I would say,
new to it, kind of scared to do it.
Yeah.
What kind of would you tell them?
Spend some time with education.
I love that.
Read a couple of books. There's a lot. You go on Amazon, you'll find lots of books on note investing. I shared a couple of them here, but spend some time reading, listen to podcasts, watch. You can go on YouTube, watch the different presentations that Quest has had with note related presenters. There are numerous ones. So learn all you can that way. And that would be a great starting point. And then from there, you can pursue some other educational opportunities or attend events. And that would be a great place to start. Before you invest any money, get comfortable, understand the different nuances. You'll learn about the different types of notes and decide what might be the right one for you to start with. And network with other individuals to learn about what they've done, and maybe they can make some introductions for you even.
I love it. And I did put this back up on that we
Yeah.
are having we changed it. It used to be twice a month. We now have it once a month. Encouraging everybody to make sure you get this. There's our virtual networking happy hour tomorrow night at 6:30. So if you haven't been, if you've been on the fence, it is fun. I'm hosting it. Come have a drink with us.
Yeah.
Join from the comfort of your couch, but it really is true, Fred. Networking, just kind of learning from other people. I think even if you've been doing things for a long time, there's always something new to learn.
There's always new ideas that you can learn, and the way you do that is just through having conversations with others. And everyone talks about what they do, and you get exposed to so much. And that's a big part of learning.
Yeah.
Is those relationships and conversations that you have. So I love those Quest networking events, and like you said, the best part is you don't have to travel anywhere. You don't have to go anywhere. You can be right in the comfort of your own home and have some good conversation. It's so much Fun.
It really is. I try to make it fun, guys. It's It's a good time. You should just come and join it. All right, Mr. Fred. Well, I have your website still up, giftfromfred.com. Make sure all of you go to the website and get more information on Fred Moskowitz, the note master. It was just such a pleasure to have you here, Fred. I really appreciate it. It's always a joy to have you here with Quest.
Thank you. It's such an honor to be back, and I always love collaborating with you and participating in different events and just sharing knowledge, sharing adding value to others. I love doing that and answering questions and really just sharing ideas. My hope is to have presented you with some new ideas that you can take and put into practice in your own lives.
You always do. It's always an amazing presentation, always something new to learn. We really, really, really appreciate you being here. I'm going to put my contact information up here just for a second in case you want to get in touch with Quest. So now you can get in touch with Fred. You can get in touch with Quest. We both would love to help you for everybody joining today. Thanks again, everybody, for joining us. Thanks for spending your lunch with us. We will be here, of course, Saturday at noon, and we will be back next Tuesday with another wonderful speaker. So thanks again, everybody. Have a wonderful afternoon. Bye, guys.
Hi.